Welcome to Theo Trade. This is Don Kaufman. It's December 18th, 2024. And if you're looking at this marketplace right now with, 35 minutes to go to the bell, it's turning into the nightmare before Christmas. Let's explain that and much more here, of course, on this Wednesday evening Theo Trade video. First and foremost, the S&Ps, they're not reacting well at all to, what Jerome Powell stated. And what he stated, he came out fairly hawkish, which is basically implied that the path forward might not be interest rate cuts anymore. So he comes out, he's a little hawkish, and immediately the market goes into a bit of a tailspin. Now, something I've been saying literally day in and day out. You got to be prepared for exactly this. People, you've seen nothing but buy side activity. At the exact same time, though, the market breadth has been absolutely terrible. In fact, we've had 12 consecutive trading sessions where the advanced decline line has been negative in the S&P 500. Today, ladies and gentlemen, this will be the 13th day in a row. And by the way, I'm looking at the S&P 100, and I got to kick this into high gear right now. Take a look at this. That is spectacular because we just snapped back into full-blown correlation. It's ugly out there. Before I go too far into, it's ugly, it's this, one of the things, though, we're not even making a move that is quote unquote statistically significant, right? We're not even but almost 2% down move inside of the S&Ps. Statistical significance really kicks in at about 3%. You see a 3% move? Oh, that's big move, right? So we're not even necessarily at statistically significant per se to the downside. But I got to tell you, right now, you look down the list of some of the usual suspects, and it looks and feels like a bottomless pit. It's not so much about the advanced decline line. It's not so much about looking at the S&Ps. Well, then again, looking at the S&Ps in the last 5 minutes and then looking at the clock, things are a little scary there. And you got over 30 minutes to go, and this thing is it's getting hammered right now. But the area that's really starting to catch my attention, of course, everybody looks at the VIX, and the VIX, all right, it's upticked, right? Yeah, I got it. Like the VIX is definitely ticking up. You look at stuff though like VVIX, that's a little bit alarming. The volatility of VIX took off to the upside. And what that implies, it goes deeper than VIX. It's looking at VIX option. What it implies is that trade, is buying calls in VIX like it's going out of style. And they are. Look at this for a second. So I'm reading into while live. Market's obviously still open, right? S&Ps are down. Now they're going to be down a full 2% here, but look at this. Trade at the ask or above, traded at the bid or below. I'm just looking at calls right now, and I want you to see there's let's just round it. There's 200,000 calls that have traded at the ask or above, but only 60,000 have actually traded at the bid or below. So it's huge, unrelenting buy-side activity, specifically in the calls and VIX. That unto itself can drive markets substantially lower. This is not necessarily just a hedge. It can be positioning, meaning like they're buying calls, which in effect can start to drive volatility, and driving volatility higher then can drive the S&Ps lower. It's a feedback loop, and you're in it right now. And it's ironic because immediately when I start talking about the S&P selling off, a lot of people go, yeah, but look at this sector, and look at Microsoft. The ironic thing is none of these are really getting like annihilated. All right, Amazon's getting beaten up a little bit. And some people are going to look at this though, they're like, was that the top, or is this just another buying opportunity over here? But unfortunately, the volatility taking off the way that it is right now, this move went from, kind of fun to that crap got serious and got serious in a hurry. All right, so let's kind of break this down. As I said, this is maybe turning into a little bit about the nightmare before Christmas, but look, overall, okay, on a year-to-date percentage, still up 25%. So don't get ahead of yourself. Okay, if you take a look at the Dow is not faring nearly as well. The Dow now is only up 13% year-to-date basis because the sell side activity in here has been nothing less, okay, than brutal, like day in and day out. The divergence has been huge. And that's why I've been warning, okay, of a much larger, more precipitous sell-off. And I keep saying, like, you got to be on your game. You got to be ready for this. Okay. And this is exactly, in effect, what we are seeing. All right. So as I said, kind of turning into the nightmare before Christmas, very important that we actually snapped to a high degree of correlation. Okay, we have not seen that in a considerable period of time. We keep seeing these 50-50 advanced decline lines lately. Okay, it's been like, 60, 70 stocks trading to the downside, but this is the first time we've seen in months, okay, correlation of this magnitude. And what that basically implies is it's just kind of a quintessential all down day. And you can see even stocks that are up, which is like Nvidia, okay? Nvidia right now, though, but it's hanging on by a thread. And from my perspective, this is probably going to close negative. Boeing holding on by a thread right now. Even the stocks that are up, like a Target over here, as I said, it's up like nominally right now. It's about to go negative on the day. There's no place to run to, no place to hide. It is a quintessential, again, all down day. As I said, Jerome Powell kind of came out swinging today a little bit. The indication was that Trump policies are going to be inflationary, okay, and the idea of continually cutting rates is not going to be on the table. Now, the reaction was swift and immediate and can be felt inside of the U.S. dollar. By the way, take a look at the euro versus the U.S. dollar. Okay, that's one of the bigger moves you're going to see in recent history. In fact, if you open up like a 3-year chart on here, okay, it again really substantiates that we are very, very close to being driven back to par with the US dollar versus the euro. If you're looking for that European vacation, now's the time. All right, continuing along my way. So bonds. This is one where a little bit of a catch-22. Now, I talked about the ability for bonds to break lower. Ironically, the bonds have broken lower, but for me right now, okay, I have nominal positions in bonds. And for me, what makes more sense to look at, okay, than just purely looking at the bond market right now is I'm looking at the interest rate associated with the 10-year. And in this case, this is the TNX. And again, the TNX happens to be none other than, of course, the 10-year interest rate. And again, I'll just write it up over here because we're matching, okay, some of the recent highs. This is matching highs. And what do I mean by that? You're basically at 4.5% right now on the 10-year, okay? I wouldn't be surprised to see this absolutely break out at this point. And again, I don't have much skin right now in the bond game, but I am going to say this, okay? I'm waiting very, very patiently. If the bonds continue to break, we get closer to, well over like that 4.5%. We get closer to like 5% on the 10-year. You better believe I'm going to step in and sell some puts in this bond market and in the notes. I don't mind getting long bonds. They need to be a little bit lower from here. Let's see them get a little violent kind of breakthrough, specifically like this 115 level. Okay, even down into like, I might sell like, 110, 111 bond puts here in the near future, but we'll keep you guys abridged to that situation. All right, so obviously US dollar explodes higher. The bonds get rocked. Rates explode back to the upside. And overall, I have to state, so, I realize we still have 25 minutes to go to the cash close, and it's getting a little bit more hostile out there. But there's a great way to kind of gauge this, and I want to show you on the fly. Again, the one thing you're going to pick up is that, first and foremost, when you're in the midst of volatility, okay, bottom line, screw looking at individual stocks. Okay, it just doesn't make a difference because you're in a highly correlated, property. So if there's sell side activity in the S&Ps, what it's going to basically do is statistical arbitrage kicks in. Okay, what that does is it sells individual stocks. So when I say, like, literally, like, forget it, like, stop looking at individual stocks. Yeah, but it doesn't make a difference what you are. Okay, the only thing that makes a difference at this point is hang on for the ride because it's volatility against S&Ps, because no one cares at this point. They're going to sell S&Ps, and when they sell S&Ps, okay, that trade immediately is going to resonate in the entire S&P 500, meaning that these are joined at the hip. Okay, it's servers actually driving trade. And speaking of a 3% move, you are now down officially 3% inside of the Nasdaq. So things are they're getting squirrely out there, almost a 4% move specific to the Russell. So this is where again the gloves kind of come off. But I'm going to show you a great way to kind of gauge some of the hostility, if you will, inside of this trade. Move away from the S&Ps for a second. Go to the SPX. Okay, the SPX this week, and I'm actually going to show you on a daily chart. Okay, the SPX this week was slated to move approximately $74.80. Well, obviously, we're moving a bit further than that right now, aren't we? Right? But that's actually not the key. So we were poised to move the entire week in a 5-day trading session, basically $75. Go look at the SPX and look at the expected move now. Okay, between now, right, and Friday expiration. Look at Friday PM settlement. This is a great indication. All of a sudden, you realize the entire 5-day week had about a $75 move. Oh no, now we're pricing in a $96 move plus. Think about that for a second. As time is moving forward, volatility is actually expanding. It's one of the great ways to be able to gauge risk. Okay, people, if you're looking at like VIX, you're a dinosaur. You're literally a dinosaur. I can see the VIX has gone parabolic out there, but this is a much better way to actually gauge risk. It's how serious things are really becoming. Because in the short duration, this is almost trading like a 30 VIX. And even into next week, the interesting thing is even into next week, which is a holiday trade. That's why I say you're turning into like the nightmare before Christmas. Even before it, okay, you are seeing much heavier volatility. Like next week, Christmas week, still 100+ point moves being priced in over here. So it is very, very clear that you understand the essentials of volatility. Okay, and right now, I mean, for what it's worth, okay, this is not going to be a dip buy. For right now, what it's worth, this is not going to be a dip buy. The volatility, okay, it's far too violent. This is far too violent. We are losing what was, again, a little fun sell-off over here, and that's when you're down 70 or 80 handles, okay, and we're going to downright serious at this point. And I'm going to dictate to you, and the last thing I'm going to do here on this evening's video is dictate exactly what Sirius kind of pertains to. I'm looking at the volatility futures, and these volatility futures, this is the January, February, March, and April. The vol skew has almost completely flattened out. We have not flipped over, okay, into a full-blown, like we're in what we still term a contango, okay? We have not flipped over into a backwardation, but you're 30 cents away from it. And what this basically means is that January volatility, okay, is trading at like 1880, okay? And then you have the February volatility sitting at like 1905. If, and that's Feb, okay? If the Jan vol starts to exceed the Feb vol, it basically means you're in the throes of an absolutely horrendous market move. And it's not what anybody would have expected, obviously, after umpteen trading sessions of a rally. I mean, look, this market, maybe it was well overdue for some sell side activity over here, but I'm no longer asking the question if this is a dip to buy. People will try; they can get absolutely annihilated in here. Ladies and gentlemen, you are seeing real sell side activity start to actually permeate into this marketplace. Looks like it's actually going to be here for a considerable period of time, even if we start to slow down to some degree. We start to slow down into the holiday session, obviously next week, the week after that, I think you have to anticipate this is going to be a rough ride moving forward. Thanks, everybody, for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.